The following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman.
Hi, folks. Basil Chapman calling in from the satellite station in Brooklyn, New York, where I am doing this remotely, and very fascinating 2 days we've just had. So I'm here Monday, Wednesday, Friday, 11 o'clock till noon, and thanks, Tom, for a great lead into the show, as always. And we are here for you all the time at TFNN. The programs are archived. Mine, you're looking at it now on Tiger TV, Channel 1, but I'm archived on Channel 11. And I'm here Monday, Wednesday, Friday, 11 o'clock till noon. 877-927-6648 is the number to call. End of the week, and it's going to be a fascinating close, and I'll explain exactly what I'm looking at. And you might have heard my interview with Tom last night, and my subscribers know we were looking at the last 3 to 4 sessions. We've been looking at Apple, and in my work, and I'll go through it in a moment. Apple had finally given some kind of a sell signal. It started off as a potential sell signal, then it became yesterday probably a near-term sell signal, certainly in the 120-minute chart, and today it's a full-fledged sell mode in the 120-minute chart, and if it closes anywhere around here today, it'll be a sell mode in the daily, not yet in the weekly. Weekly and monthly are still fantastically strong. So I'll go through all that. Let's just go through the numbers now. Now, I believe I'm all set, but I'm just going to switch to another screen. You might not see it, but I'm switching. Just want to get these numbers here. Let me just move this here. Okay, here we go. We've got the Dow down 87 at 12,899. S&P's down 11 at 1375. Comp index is down 33 at 3,021. Gold is down 10. I just have not seen that much in gold, even though it's kind of popped up a little bit to 1670. Silver's down 52 cents at 32. High-grade copper, this is my biggest worry. Now it's down at 363. To me, that's just not a good indication. It's the exact opposite of 2 summers ago. This is not a good sign for the economy. It says that there's a slowing down, international slowing down. Crude oil is down 42 cents at 103. We'll go to bonds, and bonds are up $1.07 ticks 30 seconds. Is that it? Yeah. At 141 and 23 30 seconds. So now let me go back to the other screen, and we've got, wow, that was quick. We've got a caller from Florida, Paul, I believe it is. Hi, how are you?
How are you doing?
I'm doing very well. You'd like to look at?
I wanted to get your projection for Las Vegas Sands for, like, let's say the next...
Yeah, this is a fascinating stock. It was a stock that I thought would be on my buy list. It went on my buy list, but the way it moves, it's so quick that if you aren't already in it and you've got to have a fairly wide stop, you just don't get a chance to safely go into a stock like this unless you're looking at the weekly chart. LVS is the symbol that we're looking at, Las Vegas Sands, in the casino and gambling area. And LVS is trading right now down 126 to 59.79. The 9-period moving average on the weekly chart has just been stupendous. From the moment it broke above it in January, the week of the 13th of January, a few months ago, it went to 46.25. Not once, even with today's weakness, has it gone even close to the 9-period moving average support of 56.22. Then you get a ChapmanWave cup and ladle pattern in the monthly chart, and their monthly chart at a high of 55.47 back in November of 2010 peak E. That 200-period moving average at 46, is it 46? Yeah, 46, became the fulcrum where it traded above it, 55.47, then below in the 35s. Most recently went above it, back over that 9-period moving average, above the 200-period moving average, above the left side lip of 55.47. And I've got this as a parallel wave count, that it's either leg F, which is not a good sign because the next time it turns down, that's bad, or leg C. My preference when I did work on it over the last few days has been to call Las Vegas Sands in leg C up in the monthly chart until there is further evidence based on the weekly chart and then the daily chart that this is going to break down. Now, do you have a position at all in this?
Yeah, a bunch of positions. And last time I talked to you, we were talking.
So you're still holding your core positions?
Yeah, I'm holding everything right now because it looks like it wants to hit the 70. Last time you said somewhere around 63.50, back to 530.08, I think was the doji you said this
right.
Or the 63.57 to the 76.50 area.
Great, yeah. Now, this is very interesting because the stochastic, even though the price has been moving up, since March, the beginning of March, the stochastic has not been, it's only been positive for about 2 or 3 sessions in the daily, yet the price has moved up. That's the reason why in my work, when I teach my Master Trader series, I give a big emphasis to the power of the 9-period exponential moving average plus the waveform itself, because once it's established that it was probably in leg C, peak C, and that it needed to go to leg D, that says that D can go higher. It doesn't have to go that much higher because if the stochastic was in the 82 to 83%, I'm willing to bet, of course we'll never be able to prove this, just the history says that there's just a really good chance that it would have broken way above the 62 level. It would have been up at the 63 to 65 area instead of making a top just yesterday at 62.09. Now, I'm going to make a suggestion. Don't act on this right away. You've got time to do it, even if it pulls back another 35 or 50 cents. Think about it. My preference at this particular point is for you to take profits in something. So in your most recent position, and I'll explain why, the risk of it going quickly, if it closes underneath 59.41 is the 9-period moving average now, if in this peak D with a little doji candle yesterday, if it closes strongly underneath 59.40, let's just say it goes by Monday at this time Monday, if it's at 59.30, there's just a really good chance it's going to test the wick of the candle of the 10th, and that'll be 57.11. If it closes under that, you've set yourself up a very nice rectangle trading parameter, and then what I would do is I would start looking to enter that position that I took off in the 54.50 to the 53.70 area, somewhere around there, and you'll have time, you'll be able to call me and we can discuss it. But my preference right now, I'm just going to jump over to the 120-minute chart. Let's see, so I never finished it there. So folks, if you're looking at Tiger TV, let me just show you something, the power of the ChapmanWave, those peak Ds. If you look at the 120-minute chart, and I know that some people can't in their software get 120. Well, you can use the 60. The reason why I like the 120 minutes, it's such a great transition between the daily, which is 24 hours, well, not 24 hours of trading, but you know what I mean, it's an entire session, and the 60-minute, which is so much shorter. So it's just a nice transition. So give me a second. I'm using one hand because I'm on a telephone instead of my usual loudspeaker system. So I don't know how you feel about that, is to take something off right now, 55.49. Yeah, I thought that was. So let me just finish up
well,
there. So
today's a bad day, and today's off the weekly options. So they're probably trying to keep it.
So you think that they're going to try to keep it close to 60 to lock it in?
Right.
Yeah, I tend to agree with you that I forgot about that aspect, and not all stocks have weekly options. This one obviously does. Let me just
very light volume so far today, so it doesn't scare me because they've got earnings at the end of the month. You know.
Oh, they've got earnings at the end of the month?
Yeah, by the end of the month they've got earnings. They just opened a new mega resort with close to 6,000 rooms in Macau. You know, this week they've opened up.
Really? Because, you know, this has a history, but the history has changed. Now, I'm doing this just by memory. There are times when the earnings have come out and it's tanked, and there are times where the earnings have come out and it has just spiraled higher, right?
Right. Yeah, it's very volatile.
Now,
what scared me was Tuesday. Okay, for the last couple of weeks, the play on it, intraday play has been, let's say, no more than $1.50 each way. Tuesday they ripped it down 374 from the high and the low. That's what's got me a little worried, but not too worried because it recovered nice.
Oh, you know what? Then why don't we do this? Because I know that you've had a lot of experience with this. You've traded it very well. That's the reason why I said don't act on this. Just think about what you might want to do. I'm going to suggest something else because you gave me the idea. Because that's your trading style, and I know that you are quite willing to sit through a sudden bumpy period because you have much greater expectations. That's the reason why I don't want to disturb your trading philosophy. But in terms of money management, I am going to say to you, rather than maybe exit right now at minus 129 because the day is young, I have to tell you from the way it's acting now on the 120-minute chart, my guess is it's going to move further away from 60 than close at 60. That's just the way it's looking right now because I think there's a lot of selling pressure in the market. So this is my suggestion. You could hold it, but maybe you just put in a stop of some of your position if it closes under 59. And that could be today, could be Monday, and that way you've got a very measured move because if you're correct, and this is forced selling because of options expiration, and now they're wiping out all the calls and they're going back to get the puts, and they maybe by the end of the day want to wipe out the puts by closing it at 59.92 or 90.99, then you're still in the position. And that means on Monday, because if that was forced selling today, Monday should have a pop-up to the upside. I actually don't think from a 120-minute chart that that's going to happen, but that would be a nice trading strategy. Then you're not telling the stock what you want. It's telling you because you would get out 80 cents lower, and if it moves higher, you're still in the stock. But some part of it, don't be afraid to take some profit off because my eye says, based on the technical analysis I'm doing, not on the monthly, not on the weekly, but on the 120 and the daily chart, that there's a real good chance we've set up a trading pattern in Las Vegas Sands, and it's going to try to climb. It's going to try to worm its way down towards the 57.33 low of the 10th. That's a few days ago. And that's the day you're talking about. That's the day that I think will become a support. If, in fact, that breaks, 55.54 is the 200-period exponential moving average in the 120-minute chart. But I know that you've got a different time perspective as well as a fundamental perspective than I have. So I'm saying, as a suggestion, don't be afraid to take some money off because at this particular point, I actually think that the upside, at least for another week, is limited to maybe a test of 62.30. I'm not sure it's going to get to the 63s now unless the market has a fabulous turnaround by the end of the day and into Monday. Right. But longer term, I'm with you. I like this stock. I think it's acting very, very well.
It's tested the 56 area a couple of times. I wouldn't care if it tested the 57 again. That just makes it stronger if it bounces off of it, in my view.
Correct, if it bounces off. But one of my eyes says that there's a rectangle formation that's it's kind of clear in my eye if it was to close under the 9-period exponential moving average of 59.41 either today or Monday. And then you just got to be ready for a little bit of a pullback. And that's why I'm saying maybe you want to take your little trading part that you put on last and treat that as something you want to put back on 2 points lower, something like that.
On the
that's just something to think of. So I hope that helps you.
7.
Thank you so much for calling. I appreciate that. And
you take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC. TFNN is proud to bring you the cutting edge of investment newsletters. Ken Shreve's Ultimate Growth Stocks.
Ken is a top-down investor who lets price and volume in the major stock indices tell him when to be in the market and when to be out. By using his unique blend of fundamental and technical analysis, Ken will protect your hard-earned capital while realizing breakout gains. Go to TFNN.com today, click Investment Newsletters, and get Ken Shree's Ultimate Growth Stocks free for 2 weeks.
Hi, I'm Steve Rhodes, co-host of The Money Masters with Tom O'Brien, seen daily at TFNN.com, author of Mastering Probabilities, a daily investment and trading newsletter, and teacher of the money game. Studies show that 3 out of 5 people are afraid for their life in trading these markets, and the number one reason given is fear of loss. Look, fear stands for false evidence appearing real, and the money game proves it. Lesson number 1, don't risk more than 1% of your trading capital on any trade. Why, you ask? Because 35 trades in a row where you risk 50 cents and make $1 are all you need to double your trading capital, versus the 230 losing trades in a row you would need to bring your balance to $100. Let me teach you more about the money game risk-free for 30 days. Go to the homepage of TFNN.com and click on my name, Steve Rhodes, for your 30-day risk-free trial. You were born to be a money master, and I'll teach you how.
X-Story Gold Mines, an NYSE Amex-listed company trading under the symbol XG, is slated to be the newest gold-silver producer in Argentina. X-Story is forecast to produce more than $250 million in bullion annually, beginning in 2013, at a cash cost of less than $200 for each ounce of gold produced. That forecast will make X-Story one of the highest margin operators in South America and a sector leader in the mining industry. X-Story has $50 million in its treasury, having spent over $60 million to date on drilling and engineering. The ultimate size of its Argentina discovery could be determined by year-end, as results from the 6 drills operating at the site are fully assessed. To find out more about X-Story Gold Mines and their exciting growth potential, click on their banner on the front page of TFNN.com or check them out on the NYSE Amex under the symbol XG.
Here's what people are saying about Tiger TV.
Let's go to John in Tampa. Hey, John, what's going on?
Hi, Tom. How are you, sir?
I'm doing great. You having a good day out there?
A wonderful day. I love your Tiger TV. I watch it every day. I'm like a kid in a candy store.
Oh, man, I appreciate you out there watching it. How long have you been watching the Tiger TV?
I'm watching almost a month now, and it's just wonderful.
It's pretty cool, isn't it?
Oh, yeah, it's cool. You see the charts and everything. Thanks so much for the hard work.
Tiger TV, a great news service from TFNN.com. This segment is brought to you by BackTech Environmental. For more information, just click the BackTech banner on the front page of TFNN.com.
Hi, everyone. We're back. Basil Chapman, Tiger Conditions. Our Dow's down 92, S&P's down 12, and we're going to go to our next caller. We've got Peter in Park City. Hi, Peter. How are you?
Very good, Basil. How are you?
I'm very well, thank you.
Excellent. If we could take a look at the euro, it looks to me like 120, that 129.75 from a while back may give it up next week. I'm just wondering your thoughts.
Yes. Now, this is very interesting. Folks, if you, for those of you who are more conversant with the ChapmanWave methodology, you'll understand that there is a technique that I developed over a number of years ago. It's mentioned briefly, but it is mentioned in my CD introducing the ChapmanWave methodology. That's only available at TFNN. And that says that periodically, instead of getting the requisite peak B, that's 4 higher peaks from the buy signal, low bar, you might get a failure just either at the exact price, so it doesn't make a new higher high, or a little bit below. So I call that peak C, and then I change it to C1, and the failure goes to C2. And the reason I do that, and I actually very often, I try to type the C2 lower than the C1 to say, visually, in a second, you look at it and you say, aha, that's like a peak D, like a phantom peak D. And the reason being that the stochastic and MACD fail immediately, and all the component parts that we are looking for a D are there, except that the price fractionally missed. Well, it's so fascinating because Peter had called, and we were looking at the 120-minute, the 200-period exponential moving average, on the daily chart, as being tremendous resistance, and had been for ages, and it got fractionally, it almost got there, back in the end of February, beginning of March, and then what happened? It failed. It came down to the support level that's been a support level since it broke out on the 25th of January. We're looking at the euro-US dollar currency pair. And on the 25th of January, it spiked from a low of 1.293 to 1.311. That was the start of a move that took it to a peak A, B, that C1, C2. Then it pulled back to that 129 level, well, it was actually 1.30 on the 15th of March, and ran up again in another peak, A, B, C, 1, and fractionally, as Peter was talking, we were talking the other day, well, it was now about 2-3 weeks, I said, Peter, I think this might miss, and it's something that I'm going to call a C2, because look at the right shoulder of the stochastic. If you're looking at Tiger 1, this is this lower, these yellow and red lines, that's the slow stochastic, and it's made of 14, 3, 3, 1, and 20% and 80% of the parameters we're looking at. And this top one is the MACD. And you'll see the MACD on that rally that failed under the 200-period moving average on the, was that the very beginning of April? That had the MACD way lower than it was when it made the previous high back in the end of February. And what I said was, it's a chance that it's going to fail in another. It's very unusual. Actually, it's one of the patterns I haven't seen. I don't actually recall making a note of it, as I've been doing in my notebook with just hundreds and hundreds of examples of these different techniques. So this is very unusual. And what it says is, be careful, because if you start to make lower highs and lower lows, you've set a precedent that hasn't been here in the euro for a very long time, and it's going to say that if not only does it break down, but in this last move, if it goes under 1.30, 034, I think it's 0.834, that says you're starting to make lower lows and lower highs. So I'm in agreement with you, even though it looked like it was going to be pretty darn good intraday yesterday, you could see that if you look at the weekly chart, you'll see that so far the MACD is still holding very well, but the MACD is still way under, well, the 0% line for the histogram of the MACD in the weekly chart is starting to decline, and the MACD didn't move up into the positive area. It's still way below the that 0% line. At the same time, the stochastic has failed completely to get even to the 72, 73% area. It couldn't even get there, let alone the 80% area. That says that there could be an H pattern forming. Now, if this is true, what we have to do is also say, okay, how does that fit in with the dollar? Because the dollar should actually have been breaking out if this is the case. And in fact, the dollar has been pretty much stuck in a trading range and should be doing okay today. Let's have a look. Yeah, today's okay. There's a pattern now. Do you mind if I do the dollar as well?
No, not at all. It's all linked. A nice falling axis.
Okay. So now what's really important is we've had a series of peak B minuses in the rally in the dollar. There was one that failed when the dollar made a low. That was round about the 9th of February, and then started to run up, and it failed at 80.12 on the 16th of Feb. It failed and turned around and made the pattern I call the dreaded H, and in 1, 2, 3, 4, 5 bars up, it went 1, 2, 3, 4, 5.
Hi, folks. Turns out my best student became my best teacher. Steve Rhodes absolutely raised my standards, and I'll guarantee he'll raise yours.
Thanks, Tom. What I've learned is that if you want more, you must become more. And that transformation, folks, that occurs the moment you decide to become a master. Now, the quickest way to mastery is through immersion. And for 2 solid days in Denver, Boston, and Tampa, I'll create a new standard of wealth for those few trader investors who have a burning desire to succeed. At my Master Trader course, I'll teach you how to create the ultimate money machine. These are the best-kept secrets in the business. Roadblocks, folks. Dabblers give up when they first appear. Stressors last just a little bit longer, but masters expect roadblocks and achieve extraordinary results when they bust right through them. I have all the benefit of knowing the type of wealth creation that I can generate for you. You don't. That's why I'm making this unconditional money-back guarantee. If for any reason you're not satisfied with my Master Trader course, I'll refund every penny. That's right. I take all the risk, and you get all the benefit. Go to the homepage at tfnn.com and sign up today.
You've heard Tom O'Brien on the air, and you've always thought about trying out his newsletter, Market Insights. Well, now is the perfect time. For a limited time only, when you sign up for a 2-week free trial to Market Insights, we'll send you a free copy of Tom O'Brien's best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System. If you decide to cancel within the 2-week trial period, pay absolutely nothing and keep Tom's book as a free gift from us. Tom sends out his daily newsletter each morning by 9:30 a.m. with trade recommendations, including price targets and price stops. As recently as March 21st, Market Insights subscribers closed out a position for more than a 25% profit in just over 2 weeks. To get your 2-week free trial to Market Insights, along with your free copy of The Art of Timing the Trade, Your Ultimate Trading Mastery System, visit the front page of TFNN.com. Supplies are limited for this one-of-a-kind special, so act today and don't let this opportunity pass you by. Offer only valid for new subscribers. In the world of financial markets, there's a new player in town with an exciting new way to trade the markets. Nadex now offers binary options as well as bull spreads in a wide range of indices, along with commodity and forex markets. With as little as $100, you can gain access to a new way to trade global financial markets while guaranteeing that your risk will always be capped. Nadex allows you to multiply your trading opportunities in ways never imagined before and access markets you once thought were out of reach. With short-term trading opportunities available, including binary options expiring each hour the market is open, Nadex allows you to take advantage of a variety of market conditions regardless of volatility or market direction. Now is the time to take advantage of this exciting new market. Don't let this trading opportunity pass you by. Open your account today by clicking on the Nadex banner on the front page of TFNN.com. Nadex, a better way to trade.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Smith Barney. Simply picking the right stocks is not enough. Research has shown that choosing the right proportion of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley Smith Barney believes that a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what asset allocation and a Morgan Stanley Smith Barney financial advisor can do for you. Call Angela O'Brien, First Vice President and Certified Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Smith Barney, LLC. Member SIPC.
This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
Hi, everyone. We're back. Sorry, I'm doing this remotely, so it's a little difficult for me to hear when the break is coming up and to actually look at the clock at the same time. So my apologies. Very unprofessional. I'm doing my best, and we'll keep trying to do our best. Yeah, and we've got Peter on the line. Peter wants to know about the EUR-USD, but I'm also looking. You cannot look at that alone. You have to look at it with the dollar itself. Now, Peter, the dollar, it's so fascinating that with all this movement that we've seen, the dollar has basically been in a trading range. And now what I'd spoken about a while ago is that I said I believe, and I have no proof, it's just an assumption based on experience of following the dollar for since I got a buy signal the very first time back in 93, 93. Where I got a very nice buy signal, and that buy signal went all the way to 120. So I'm looking at this, and I'm saying I believe, and I might be wrong, but I think that the government is still trying to keep the dollar low. I'm not sure how I could really prove it, but it seems to me that the rallies that we've had in the dollar should have had much more extensive moves to the upside. And that says they've managed to keep it in a trading range. That trading range is going to break if the dollar breaks decisively above. The first level is 80.18, the high of the 5th of April. And the reason I'm saying that is that there's a pattern that I call the falling axis, a declining, expanding cone forming in the daily. The stochastic almost went to 80%. Now it's pulled back, but the MACD is holding very steady. The way it's holding now is actually there's a technique that I use in the CD introducing the ChapmanWave methodology when I discuss the MACD and the stochastic in great detail. I talk about the moving averages, and I talk about something called it's a flat stochastic or a flat MACD. That's where the fast-moving average holds just above or just below the previous, the red line, the slow-moving average. When it does that, what it says is, I'm going to remain in the last major signal. In this case, it's still a buy signal from the low of trough F back on the 29th of February at 78.10. It says also that there's a limited upside. I don't know why it works like this, and you can even see that that's exactly what happened back in the end of February, beginning of March. The same thing happened with the flat MACD, but this one's even flatter. It says, I'm going to keep you from going down too much, but I'm also going to keep you from going up too much. And that fits in this pattern that I talk about, the rectangle formation, which means that if it closes decisively above that high of 80.18, then it can tackle the peak B, the second peak B minus that failed. And that was the one that started on the 29th of February. That's when we got cut off just now. And I was discussing and went to a top at on the 15th at 80.74, and then it pulled back. Where? Look at the way this 200-period moving average is rising gently higher, and it keeps holding as fantastic support. That says to me the bias for the dollar is not to go down very much. It's how does it get to the upside. And that upside, even in a market like this where there was, I don't know what the news was this morning because I wasn't listening, but whatever knocked the futures down, I suspect from what I'm looking at that there's a rotation that's still going on, and that rotation even includes the currencies. And until the dollar can decisively break above the high of 80.75, let's call it 81, I would even go so far as to say until the dollar can close above the 81.78 high back in the, let me just go to the 13th of January, it's going to be in this trading range. Now, how does it affect, if you go to the USD, JPY, the currency pair, you will see, USD, JPY, you will see that that's been also in the inverse of the dollar. It's been down from that C1, peak C2 high on the, was that March, right? March 21st at 84.09. It's just been gradually making the 9-period moving average tremendous resistance, but at the same time that 200-period support at 79.54 is key. So you can see that we've got sideways, basically sideways action. If you're looking at a weekly or a daily chart, obviously 120-minute chart, that's completely different. There's a lot of action there. But on the shorter term, sideways action until or if the USD, the dollar Japanese yen, crunches and really closes below 79.30. It's in this sideways consolidation. It could rally towards the 81.40 area, it could come back again. And that's kind of what I'm looking at. So if I had to put it into the context of, even to put into the context of gold, you will see gold's pretty much doing the same thing. It's in a declining mode, but it's also trying to set in place some kind of a boundary on the upside, the low side at 16.18 or so. The upside, a lot of resistance in the 16.96 area. So until the currencies and gold, I'd include silver, start to really break either way, I think we're in a trading range with the major mode. In this case, the gold is still in a sell mode in the daily and weekly chart from the high back in the end of February, and the dollar remains in this kind of passive buy mode, but not really giving sell signals at this particular point. So those are the parameters, and I would say if the Dow closes today, regardless of any other action going on, if the Dow closes decisively into the 30,320s or 330s, it's telling us that there's still internal strength. If by the end of the day the Dow closes below 12,870, 12,860, and then I'm going to be watching how does the dollar act, how does it react, how does the euro currency, dollar currency pair. I think by Tuesday afternoon, Wednesday morning of next week, we're going to have information that's going to tell us a tremendous amount about the chances of a consolidation unfolding, a rotational correction unfolding in the general market, or whether there's enough residual strength to try to tackle the recent highs. If they go to the recent highs, the dollar will start to pull back again. Euro could rally a little bit more. So I hope that helps you.
No, I appreciate it. Thanks so much for all the currency help there, Basil. It's awesome.
Thank you very much, Peter. Call again. Have a great weekend. And is your wife in the marathon again this coming year?
No, she's not. She's taking a year off.
Oh, okay, good. All right, thanks for calling, Peter. So, folks, now let's go through this. We've got a moment here. I need to double check, if you don't mind, to see who's next. Let me look here. Next. Okay, so we've got a moment here. I want to do this. I want to go through exactly to clarify what I'm looking at, and what's really important. I'm going to include bonds and the VIX. I'm first just going to go to the Dow Jones Industrial Index or average. That shows you that an arch formation has formed. You got a cup and handle breakout. It went to 13,297 on the 2nd of April. And now it's using the 9-period moving average. And as I said to subscribers yesterday, I'm anticipating a rally. I thought it might take 3 days to get there, but to test the 12,990, that's where the 9-period exponential moving average was. I think it was 12,986. And if it fails there, then we could start to see a pullback. And that pullback should take us, we've already gone to the 12,700. That was my first target. Actually, we slipped underneath it. Yesterday we went to, day before we went to 12,715. So that's going to be key. The next level of support for the Dow will be 12,550 to 12,500. That's the Dow. Now, what's really important is that I'm looking at certain stocks. Let me just run through these. GE, my Dow Quartet. The Dow Quartet says that GE had a fabulous move from the 14s to the 20 area. It's pulling back. It's trying to digest these gains. It's trying to turn this area between 18.32 and I would say for now 19.60 if we can get there. Sort of a best case basis in the shorter term. My suspicion is it's actually going to be pulling back, and there's a chance that if GE cannot break above and close above $19.40 in the next, by Tuesday afternoon, Wednesday, definitely, then it's in this trading range and it's going to be coming back, and it's the 18.20 area is the major support in the 200-period exponential moving average, which will take it below 18.32, the big arch low that formed back in March the 6th. Now let's do the S&P, because the SPX, and I want to go to the Qs, and we're going to look at Apple as well. The S&P is doing the same thing, but it did not even come close to the 1340.23 low of the 6th of March. I think it was the 6th of March. Whoops, there, cancel. To the 6th of March. So that says that so far this is a successful arch test of the left side low bar. It went just above the 9-period exponential moving average yesterday and today, and then it pulled back. Now, if the S&P closes below, S&P closes below 1368, then it will probably test and break under the 1357, and that makes that 1340 area really important to look at. Now, if I'm looking at the, I had a question. Let's see, I'm doing two things at once. I'm going to do two things at once again. And let me just get that. Yes, we do have another caller. I did not want to lose any callers, so I'm going to go to Lou. There's a bunch of things that we're going to look at as well, but Lou, why don't you come on? Hi, Lou. How are you?
Good. How are you, Basil?
Very well, thank you. You'd like to look at?
I'm going to let you look at BGZ. I got in it yesterday.
BGZ. All right. So the BGZ is the large cap bear 3 times share. So would it be okay if I looked at large cap? So if I looked at the S&P, is that the relationship? I always forget.
That should do it, yeah.
Okay, so let's just do that. I was about to do the S&P, and I'm going to do it in a little bit more. Do you have a position?
Yeah, at 2079.
Okay, and trading right now at? I missed the price.
2132.
Okay, so then this is what I'm going to say to you. I would be really strict, and I'll explain what I'm looking at. So the high of yesterday in the S&P was 1380. Oh, I can't see this too clearly. 1388.13. The high today was 1387.61, a fractionally lower high bar. There's a chapter. There's a section that I'm doing in my work on all the different ChapmanWave techniques. And that has a whole section on what happens when there are two bars which are fractionally, one is fractionally lower, not higher, fractionally lower than the other, but especially in monthly charts. But I found over the last 3 weeks that actually it works. It's a really good signal even in the daily and even intraday. So what I'm saying to you is, because you made a fractionally lower high today, if the S&P by the end of the day closes towards the low and Monday comes down, you're in a fantastic position, because by Wednesday of next week, we should be testing the low of 1357.38. That's the low of the 10th. Now, here's the other thing. On the upside, I don't know what your stop is, because these things move really quickly. But I would say to you that if there's a rally at the end of the day, you might have to hold it over the weekend, because I'm going to tell you that it's 1 penny above 1388.13. I would not be short at all, because that means that the S&P has internal strength, and the stochastic turnaround is going to start to impact the fast-moving. If you're looking at Tiger 1 or if you're in the den, you'll see that the MACD has made a little W formation, and if it starts that fast-moving average starts to flatten out, S&P will have strength. Right now, it's negative. I think you're in the exact right position for the way it's looking at this particular time. So my parameters, based on the S&P, if it starts to rally and gets, by the end of the day, gets even close to 1382.40, I'd say, I would still hold short, but you better be ready on Monday that if over the weekend there's something that happens to gap it up Monday, that's just tough. That's the way it's going to be. But I think you're in the right position right now, because that extra move we had yesterday was certainly more than I was anticipating. That's number one. Anticipating in one session. I thought it might take 3 sessions. I was hoping that we would be able to keep in my opening call for subscribers, our QID position and the DXD, the 200% short, the down. Instead, we took profits, but I was actually hoping to keep it, because my suspicion was that we are really in a consolidation phase, or a rotational consolidation phase. So I don't know what your parameters are in terms of stops, because I don't actually trade these triples. I do follow them very closely, but I don't trade them. Now, there's a 200-period moving average support. Do you ever use the 200 EMA?
Sometimes, yeah.
Okay. If you're looking at that, I'd advise you to put it on your chart, because it's really important. But if you got it on your chart, what you will see is that the S&P right now is using the 200-period exponential moving average as key support. If that support goes, it's going to quickly tackle the 1367 area. But I'm looking at this as I'm saying, from yesterday's action, there were some really positive chart patterns forming. So the consolidation effect and the reality is the effect. I'm looking at this and I'm saying I'm going to have to wait till the end of the day to see where we close to make some decisions over the weekend, because there are some stocks that are holding really well. And now, if you don't mind, I'm going to Apple. I don't know if Apple's in the S&P. Of course, it's in the NASDAQ, but I don't know if it's in the S&P. But if you don't mind, I'm going to use this as a bit of an example to say, if you're looking at Apple, Apple gave me a signal recently that it made a peak F top in the ChapmanWave 120-minute chart on the 10th at 640.
Put the power of the ChapmanWave methodology to work for you. No matter what market you trade, what time frame you trade in, or your trading style, the opening call, Basil Chapman's daily market newsletter, is bursting with the information and trades you need to become a more successful trader.
I've been using Basil Chapman's ChapmanWave methodology for several years now. His ChapmanWave can be used for any time period for not only equities, but futures, currencies, commodities. I've been also a subscriber of his opening call, which I find an invaluable tool to help me analyze the potential of the market each day. He gives you opportunities to go short and long. It includes recommendations on stocks. I strongly recommend people using the ChapmanWave, and I very, very strongly support the use of his opening call.
To find out more about Basil Chapman and his ChapmanWave methodology, and to get your 2-week free trial of the opening call, a $64 value, visit tfnn.com today.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to tfnn.com today. Don't miss out on this great offer. Act now. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to tfnn.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. Great Basin Gold is a mining company engaged in the exploration and development of 2 emerging gold properties in Nevada and South Africa with a total resource base of more than 23 million gold ounces. Great Basin's Burnstone mine in South Africa opened in February of this year with a resource of 20 million gold ounces, becoming the first mine to open in the historic Witwatersrand Basin in the last 30 years. The Burnstone mine is projected to have a 25-year mine life and is fully financed with production anticipated to be over 250,000 ounces per year at a cash cost of only $450 per ounce. The Hollister mine in Nevada became fully integrated in the 4th quarter of 2010 with annual production estimates of 110,000 ounces of gold per year over the 8-year mine life at a cash cost of only $527 per ounce. Great Basin Gold is cash flow positive and trades on the Toronto and New York stock exchanges under the symbol GBG.
This segment is brought to you by TFNN. Test drive all the newsletters for free at tfnn.com.
Hi, folks. Basil Chapman. Sorry because I did that again. Just didn't get it through the break. And what I was talking... I can't remember what I was talking about. It was, that's right, on the S&P. So I've given those parameters. Now, this is also key that I've got caller waiting online. We've got Nick, and I'm going to take Nick, but there's just one question that I had in the den first that was asked earlier about SEE, which is the sealed air. Wow, I used to follow this years ago. Sealed air is trading at 18.88. It's up 11 cents. The monthly chart went A, B, C, D, E, perfect, peak, F. Now, their 200-period moving average in the monthly, it's a repellent, but it's also a magnet line. So this is something that I'm watching closely at this particular point. I haven't looked at sealed air for a while, but that's exactly the same thing that happened in the 200-period moving average of the weekly chart. It went to peak D, it's pulled back, but the MACD has not crossed negative yet, and that says a particular technique. I can't actually put a down arrow officially until it closes negative, and that says there's still internal strength. Now, on a short-term basis, I don't know if you're looking at it, if you're in it. If you're in it, I would use a stop. Right now it's at 1889. I would use a stop if it closes I'd watch it really closely if it gets under 18.32. But absolutely, if it starts to test the 1812 area, that's going to change the weekly chart to negative and probably pull the MACD down. So if you're in it, use a part of your position. I don't know when you got in, but if you're in it and you've been in a while, a part of your position is to have a stop somewhere as you're getting close to the 1820, 1810 area, number one. But number two, the way it's acting now, it's really nice. It's trying to fill the gap. How it fills the gap over 19.16 is key. If it, by Tuesday afternoon, Wednesday morning, if it's actually filled it and not pulled back sharply, but holding the 9-period moving average at 18.67, let's say, that's going to be very positive action. Now let's go to Nick. Hi, Nick. How are you?
Good. Thank you for taking my call.
My pleasure. Thank you for waiting. You'd like to look at?
Goldman Sachs?
Okay. Do you have a position in Goldman Sachs?
No, just sold it and was looking forward to re-enter.
Okay. So then I'm going to say to you two things are very important about Goldman Sachs. It bounced off the 200-period moving average. GS is a symbol. It's down 419 at 116.20. It had a spectacular day yesterday. I say spectacular because it's not had a move like this since back in 13th of March. The fact that it's giving it back and it's almost taking out yesterday's low, it's sitting on the 200-period moving average. This is another reason why I'm looking at the XLF and I'm saying mixed market, but the weight of evidence for me says that there are going to be a lot of buying opportunities if you have patience. So I'm going to say to you, have patience. Let's see if by next week, forget Monday, let's talk about Tuesday, Wednesday. If on Tuesday or Wednesday, Goldman Sachs has not broken under 114. I'd even say if it hasn't closed under 114, but in fact it is trading at about 117.50 to 118.10. Then I'm going to say to you, okay, now we can look at it a little differently. If it breaks down, would you be prepared to go short to Goldman Sachs, or are you only looking at a long position?
Mainly long.
Okay, so then I'm going to say to you, hold off. I would not do anything with Goldman Sachs, and I'll explain one simple fact, that if Goldman Sachs has internal strength, first of all, it won't close at the low of the day, even if it's options expiration. It'll fight to get back to the 117.80s, but if on Monday it cannot find any strength, that is not a good sign. That's just, to me, it's starting to close under the 9-period moving average for the first time. Last week it just closed under, and today it's underneath it. I'm going to say hold off. I know that you're looking for a longer-term position, more intermediate term, hold off. Let's see how it tests the 112 to 110 area sometime next week, okay?
Sounds good. Thank you so much. Have a great weekend.
Thank you very much. Folks, it's just about to wrap up. Nico DeHaan comes on. Then you've got Dave White. Fabulous shows. Tom O'Brien, absolute great wrap-up of the week, 4 o'clock till 6. So Basil Chapman, my service is the opening call. Go to the front page of TFN. This is a great time to get it. 2 weeks free. These are really important 2 weeks coming up. And I've done a lot of work on this, and we've been trading up and down. We're not afraid to go short. We're not afraid to go long. This is a fascinating market for both sides of the